Hey, welcome back. It's Jason Walter here. According to Black Knight, the housing market is now the least affordable it has been since the mid-1980s. On top of that, the average home price is now more than 6 times the median household income, the largest multiple on record since the early 1970s. Clearly, we have a housing market affordability issue across the United States right now. And because of this, home buyers have hit the brakes on buying houses right now. In fact, so much so that housing inventory has now increased by 125% since the first week of March. So the total number of houses for sale in the US right now is up by 125% in the last 5 months. So in today's video, I'm going to take a deep dive into what we're seeing right now with our housing market, especially regarding housing inventory and price reductions, for example. And as I always mention, every housing market's different, so I'm going to be sharing some select cities with you guys to share the latest housing market trends. And of course, before we dive into today's video, if you guys are looking for a real estate agent referral, whether you're looking to buy or sell a house from virtually anywhere in the United States, then check out that link below, which is homeandmoney.com/Jason to get started today. So with that said, let's go ahead and dive right into the video here. And this is according to altosresearch.com. They have a great YouTube channel going over the latest housing market trends on a national level. So check them out. Again, altosresearch.com. So here's what I found out when I was analyzing the report here. So here's housing inventory across the United States. According to them, for the 7 days ending July 29th, we have approximately 538,000 houses for sale. Compare that to 1 year ago, we had approximately 407,000 houses for sale. So by my dumb math, that's an increase of 32% compared to 1 year ago. But this is the biggest takeaway or the biggest news headline we should be looking at though, because when looking at housing inventory at the beginning of March, take a look at this. So at the beginning of March, we have 240,000 houses for sale. Now we have 540,000, just under 540,000. So that's a 124% increase of housing supply ever since March 4th of this year. So that's a big news headline that I think we should be focusing on rather than year-over-year changes. So right now we have more active inventory compared to 2021, but much more compared to March of this year. We also have a little bit less compared to 2020. In 2020, we had approximately 626,000 houses for sale. And back in 2019, obviously pre-COVID, we had just under 1 million houses for sale. But despite the fact that we have basically far less housing inventory compared to 2019, price reductions have been skyrocketing. So according to altosresearch.com, for the 7 days ending July 29th, the share of price drops in the United States right now is at 36.24%, 36%. So take a look at this, because in the middle of April, the share was basically 18%. So for the middle of April until now, the share of price drops has doubled. On top of that, the share of price drops is also greater than the past few years as well. So 1 year ago, the share of price drops was around 24%. And back in 2020, the share was about 26%. And also pre-COVID levels back in 2019, the share was about 35%. So in other words, the levels we have right now is just above 2019's levels, but this trajectory is definitely something we should be paying attention to, because this is the same trajectory we're seeing for housing inventory, for example. I also noticed that altosresearch.com has what's called the Market Action Index, or their MAI. And they're stating that on average across the United States, we still have a strong seller's market. But I've been looking at these trends on a weekly basis for a couple of months now. And this gauge right here for 53, if it's over here, it's a very, very strong seller's market. Obviously over here, it's a buyer's market. So obviously the higher the number here, the stronger the seller's market is. And obviously if this number was a lot lower, that would be an indication of more of a buyer's market, if it was less than 30, for example. But this gauge right here has basically been moving towards a buyer's market over the past several months now. So part of the reason why we have a strong seller's market on average across the United States right now is because the houses that are selling are still selling very quickly. So here's the median days on the market, or their DOM, on a national level. So right now, the most recent trend we have right now is 28. So the median days on the market is 28 days. This is the time period when a home seller lists their home for sale until they ultimately accept an offer from a home buyer and the house actually sells. This is a lagging indicator. But take a look at this, because this trend has been changing though. So ever since basically April, or let's just call it May of this year, we had about 21 days was the median days on the market. And that was basically flat all the way until we hit July. So once we hit July, that bumped up to 28 days. And over the past few weeks here, that trend line has not increased or decreased. It has basically plateaued. So at 28 days right now, we're basically on par with last year's levels. Last year at this time, we were also at 28 days. But back in 2020, days on the market was 56 days. Also pre-COVID, average days on the market or median days on the market was 63 days. So in other words, houses that are selling are still selling very quickly, but houses that are overpriced are getting a lot of price reductions right now. So with that said, let's have a look at some different markets and some different cities across the United States to see what is different here, because there's some very big differences here. So I want to go over in today's video very quickly Boise, Idaho, Austin, Texas, Salt Lake City, Utah, Sacramento, where I live and work as a real estate agent, Dallas, Texas, Denver, Colorado, Milwaukee, Wisconsin, as well as Madison, Wisconsin. I'm going to be going over at a very high level what we're seeing regarding housing inventory and especially price reductions as well. So first, let's have a look at Boise, Idaho. They had one of the highest rates of home price appreciation ever since this pandemic started. So right now they have still a strong seller's market, but this gauge here is actually less than the national average at 45. Again, the national average is at 53. So they basically still have a seller's market, but not as strong as the national average here. So take a look at this because this is pretty astonishing. Inventory right now, look at this, 826 properties on the market as of today. But look at this, at the beginning of this year, let's just call it February 1st, or I should say February 4th. They only had 133 houses for sale. Now they have 826 properties for sale. So a giant increase. This number here has been basically going straight up. And the levels right now are far higher than the past few years as well. I really wish they had 2017 to 2019 levels here, but they only include 2019. But the levels right now far higher compared to the past few years. I mean, back pre-COVID, 500 houses for sale. Now they have 826 properties for sale. So let's look at price drops though, because price drops in Boise have been skyrocketing greatly. So the 7-day average right now, look at that, 60.77%. So in other words, the share of houses listed for sale that have had price drops is basically at 61%. 1 year ago, it was 35%. Also pre-COVID, it was only 38.4%. So they had a giant increase of price reductions, especially compared to the first half of this year. So on March 4th of this year, the share of price drops was only 15.7%. Now it is 60.77%. I mean, talk about a turnaround in their housing market there. They're seeing this giant shift because home buyers are really backing out, and that's causing this shift in their housing market and causing housing inventory to increase. Also in Boise, they're starting to see home prices decrease as well. So as of April 15th, the median list price was $682,000. Now it is $575,000. Days on the market is also increasing as well. The days on the market is at 42 days. But back in June 10th of this year, or the middle of June, average days on the market was 30 days. So they have basically a 30% increase of days on the market compared to about a month and a half ago. So that was Boise, Idaho. So let's have a look at Austin, Texas, to have a look at the latest housing market trends. And by the way, these cities I'm sharing with you guys today are moving from a seller's market to a very strong seller's market. That's the trend line for these cities here. So let's look at Austin, Texas. So Austin, Texas is also a very strong seller's market, a little bit stronger than Boise, Idaho. So let's have a look at housing inventory in Austin, Texas. So right now they have 2,460 properties for sale in Austin. And by the way, these are only houses. This excludes condos. So they have just under 2,500 houses for sale. But look at this. On February 11th, it was only 372 houses for sale. Now they have just under 2,500 houses for sale. Also compared to 1 year ago, they had about 1,000 houses for sale. In 2020, about 1,400 houses. And in 2019 at this time, around 2,300 houses for sale. So this trend line right here is basically going straight up ever since April. And that was when approximately we hit 5% on average for the 30-year fixed rate mortgage across the United States. So housing inventory is absolutely skyrocketing in Austin, Texas. Let's have a look at price drops. So price drops right now, look at that, at 50% right now. Compare that to 1 year ago, it was basically 28%. Also pre-COVID levels, they were at 46.47%. So they have more price reductions right now than at least the last 3 years. Also, take a look at this because on March 11th, wow, look at that. The share price drops was only about 12%. Now it's at 50%. So that was a very brief summary regarding Austin, Texas. But let's have a look at Salt Lake City, Utah. And by the way, these are all areas that was extremely popular for people to migrate to during this pandemic here. So Salt Lake City, Utah, the score is at 57. So still a strong seller's market, but a lot of changes happening right now. So in Salt Lake right now, they have 677 houses for sale. Compare that to basically February of this year, they only had 109 houses for sale. So basically they have what? Almost 6 times or almost 7 times the amount of houses for sale compared to February of this year. Also from 1 year ago, they had just under 400 houses for sale. And in 2019, it was about 700 houses for sale as well. So they have far more houses for sale compared to 2021 and 2020, and more or less on par with 2019's levels. So again, this is another market. We're seeing a giant increase of houses for sale in their area there. So let's take a look at price drops though. So price drops are at, wow, look at that. They're at 54% right now. Compare that to February 18th, it was only 10%. That's crazy. So it went from 10%, now it's at 53.6%. Pretty crazy. And this is also far higher than the past few years as well, because the peak besides this year was back in August 2019 at 50%. Now the share is at 54%. And because they're seeing this huge increase of housing supply and of course a lot of price drops, they're seeing the median list price also decrease as well. So it basically was at around $750,000 at the end of April. Now it's only at $675,000. So that was Salt Lake City, Utah. Let's have a look at Sacramento, California, where I live and work as a real estate agent. We're seeing a lot of changes here, by the way. A big increase of housing supply, as you can see right here. So housing inventory, about 1,000 houses listed for sale right now. But compare that to January 7th, we only had 302 houses for sale. So we basically have 3 times the share, or not 3 times the share, we basically have 3 times the amount of houses for sale compared to February of this year. Also compared to 2021, we had 641 houses for sale. And inventory right now is obviously higher than in 2021 and also in 2019 as well. Let's look at price drops. So price decreases right now in Sacramento, California, about 50% right now. I mean, vastly different compared to the early parts of this year. So on April 1st, the share price drops was only 15%. Now it is almost 50%, far higher than 2019 all the way until 2021. And again, because we're seeing this giant increase of housing supply due to a pullback in home buying demand, median listing prices is also decreasing as well. So as of April 15th, the median list price was $539,000. Now it's $505,000. And check this out because this is pretty crazy. I actually just noticed this. So the median days in the market, this is pretty wild. Take a look at this. So right now it's 28 days. Take a look at this though. On April 15th, our median days in the market was only 7 days. Now it's 28 days. What a turnaround, because I remember houses being sold very, very quickly, but the tide has definitely changed due to this pullback in home buying demand. Let's take a look at Dallas, Texas. This is one of the cities you guys requested. You guys wanted me to make a video regarding. I'll just give you guys a brief summary of what we're seeing in Dallas, Texas. So their score is 64. Again, on a national average, it's 53, more towards a buyer's market. So in Dallas, Texas, it's more of a seller's market compared to the national average right now. Let's look at inventory though. Look at this, it's pretty interesting. So inventory is basically 1,400 houses for sale. 1 year ago, it was basically 1,100 houses for sale. We basically have, or I should say not we, in Dallas, Texas, they have less houses listed for sale compared to 2020 and also compared to 2019. In fact, compared to 2019, we basically have half as many houses listed for sale in Dallas, Texas compared to now. So in Dallas, Texas, as of April 9th, they had just over 3,100 houses for sale. Now they only have 1,400. So inventory is far less compared to 2019, and it's only slightly more compared to 2021. Let's look at price drops. So price decreases in Dallas, Texas right now. The share of price drops is at 41.8% in Dallas, Texas. Compare that to 2021, it was 35.67%. In 2020, it was also around 43%. And then 2019, it was around 52%. So the share price drops right now are higher than compared to last year, but basically on par with 2020's levels. But look at this though. Again, the trajectory has basically been going straight up. So as of March 25th, the share was only 18%. Now it is at 41.8%. Also in Dallas, Texas, it's taking longer for houses to sell. So the median days in the market right now is 28 days. But look at this. As of April 15th, the median days in the market was only 7 days. So very comparable to Sacramento, for example. Okay, that was a brief summary for Dallas, Texas. Let's have a look at Denver, Colorado. Their score is 69, more of a stronger seller's market. Let's look at inventory though. Inventory, wow, look at that. Inventory is up quite a bit. Almost 1,000 houses listed for sale. But look at this, back in December 31st, only 150. So far more houses listed for sale compared to December and January of this year. And also compared to this time in 2021 as well. In 2021, about 548 houses for sale. Now they have over 1,000, or almost 1,000 houses for sale. Let's look at price drops though. So price drops in Denver, Colorado. Price drops right now, look at that, going straight up. 50.16% is a share of price drops, but back then, May 6th, the share was only 20%. So they basically have twice a share of price drops ever since the end of May, when the share was around 25%. And right now, the share of price drops at 50% is basically on par with 2019's levels. And days on the market has also been increasing in Denver, Colorado at 34 days. Back in the middle of June, it was around 25 days. And also the median asking price has also been decreasing as well. It went from $750,000 on April 15th down to $699,000 as of July 29th. Okay, that was a brief summary for Denver, Colorado, but let's have a look at two markets in which it's a very, very strong seller's market. The first one is in Milwaukee, Wisconsin. Milwaukee, Wisconsin actually did a triathlon there, or actually two triathlons a long time ago when I did the national championships there in Milwaukee, Wisconsin. Anyways, that was when I was a young buck. So right now the inventory in Milwaukee, Wisconsin, right now they have 572 houses for sale. Compare that to last year, they had 690 houses for sale. So the trend line has basically been very, very low. I mean, look at this right here. Right now, 590. Compared to a pre-COVID, they had 1,670 houses for sale. So they have far less compared to the past couple of years, especially compared to 2019. Let's look at price drops though. So price drops in Milwaukee, Wisconsin are at 41.43%, higher than 2020 and also compared to 2019 as well. So I'm guessing why it's a strong seller's market in Milwaukee, Wisconsin is due to a lack of houses for sale. Because take a look at this, because the median list price has also been increasing ever since April of this year. And also the average days on the market has also been decreasing as well. So as of April 15th, look at that. The average days on the market was 81 days. Now it's 51 days. Also, when looking at the median days on the market, it's at 21 days, which is a little bit less compared to, let's just say, April 22nd of this year. So that was Milwaukee, Wisconsin. Let's have a look at Madison, Wisconsin, because this is a very, very strong seller's market. The score here is at 90. Compare that to the national average again. On a national average, it's 53. Compare that to Boise, Idaho, 45. So right now, it's a very, very strong seller's market, and that's what has been happening so far this year. Because look at this. I just noticed this. For this year, going back all the way until April 15th, the score was almost 100. And by the way, 100 means it's a very, 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 very strong seller's market. So it's been that way for a very long time. It's starting to move downward here, but still very high levels at about 90 right now. Let's look at housing inventory in Madison, Wisconsin, though. So right now they basically have the same number of houses for sale compared to 2021 and very close to 2020 levels as well, but far less compared to 2019 when they had just under 600 houses for sale. Now they only have 155 houses for sale. And this is probably why they're seeing a strong seller's market, because they have a lack of houses for sale, potentially from a lack of houses being listed for sale, but also potentially from home buyers gobbling up the houses that do hit the market. Let's have a look at price reductions in Madison, Wisconsin. So the share of price reductions in Madison, Wisconsin is at 26%. Still elevated compared to last year. Last year was at 25%. In 2020, it was 28%. And in 2019, it was 35%. So the share right now at 26.45% is obviously a much lower than in Boise, Idaho, for example, when the share is just under 61%. And as you guys can see, every housing market's different. There's a lot of nuances with every market here, and there's some very big differences, of course. If you guys got any value out of today's video whatsoever, then please hit the like button and greatly appreciate that. Hope you guys have an awesome day. I look forward to seeing you on the next video.